All right, to help us break down the Fed's potential next move, we're joined by Belpointe's chief strategist, David Nelson. David, good to see you.
Good to see you.
David, the last Fed minutes showed that some members think a rate hike was, quote, would soon be warranted. The word soon. Very interesting there. Federal Reserve Chair Janet Yellen speaking on Friday at Jackson Hole. What are you expecting? How soon is soon?
I think her commentary will probably be hawkish, but I don't think there's any chance that the Fed will actually raise rates in the September meeting. We're in the middle of an election cycle right now, and regardless of what she says, I think you'll see a parade of Fed officials come out in the days subsequent, and they'll try to walk back the comments. They tend to speak their own mind. In my opinion, Michelle, I think the Fed already missed their window. Their window was all the way back in late 2013. Back then, they could have hiked into a rising GDP, which was approaching 4%. And right now, you have almost the inverse of that.
All right. So it's too late for action, is what you're saying, based on the data. Now, many are saying that the Fed is just overly concerned about the stock market reaction. Do you agree?
I think that's part of it, but the reason why they're kind of stuck between a rock and a hard place right now is the Fed's dual mandate is expanded. It's not just about jobs anymore, and it's not just about inflation. They're concerned about the dollar if and when they hike. And by the way, the rate that they finally get to, the terminal rate, will probably be very low. But when they hike rates, it's going to put upward pressure on the dollar. That's going to put downward pressure on oil. And oil is key for the recovery here in the United States, because if oil breaks certain levels, then you're going to have problems in the junk bond market. About 16% of junk bond debt is oil companies. That rolls over. That starts to affect financials. Earlier in the year, you had J.P. Morgan's Jamie Dimon and Bank of America's Brian Moynihan talk about their energy loan books. And if you start to see financials roll over, you can bet the stock market will follow pretty quickly.
And you think that that could all be the consequence of a 25 basis point raise? Because if they do raise, it's only going to be by 1/4%. Yes, it will strengthen the dollar and have an impact on oil, but how far-reaching would a rate hike be?
It's not just 25 basis points, because obviously that's not a normalization process. We're going to have to go more than that to normalize. Frankly, the Fed has been complicit in a lot of problems, and a lot of these are well documented. They're stuck right now because now we have a precarious situation. We're hiking into a weak GDP. You've got oil. If oil breaks down because of a rising dollar, then you're going to have problems in the financials. I think they're looking at all of that right now, and I think it'd be very unlikely for them to actually hike prior to the election in November.
Well, speaking of the election, how much of a factor is that in Yellen's decision? We know that Republican candidate Donald Trump has said that he would fire Yellen should he take office. I'm sure she's not necessarily considering that, but how much is the volatility that the election could pose factoring in to the likelihood of raising rates?
I don't think they, let me put it this way. I don't think they just want to, I think they want to be seen as not political. And by making a decision prior to that, look, they've waited, all year. We've had one rate hike in the last 5-6 years at this point. Waiting another couple of months isn't going to really change the dynamic. Why not just wait until November? Right now, if you look at the Fed fund probability charts, you're looking at a 28% chance in September. Jumps up a lot more for November, around 42%.
David, we've discussed this before. You're saying it's too late. The timing is never really perfect. And some make the argument that it's better that the Fed just raise rates to save face and to at least give it some arsenal in case of a real black swan catastrophe, that it will have some room to maneuver if needed, which it really doesn't have now. What do you think about that strategy?
That's a very fair point, and that's probably the only reason they want to raise right now. They have very little room. I think the terminal rate is probably going to be in the low 2% area when they finally normalize. It's going to be a lot lower than any previous cycle. You just had New York Fed President Dudley just say that there's very little to do right now. He doesn't expect rates to rise much at all.
Well, very little to do can be the theme of all the central bankers that have gathered in Jackson Hole. Are we losing faith in their abilities to manage economies, those low interest rates overseas, they're not really helping that much either. Has the Fed and perhaps central bankers at large lost some kind of credibility?
Our rates look outrageously high in comparison to the rest of the world. We live in an insane world right now. Think about it. Much central bankers right now are pushing negative interest rates, and it's turned the world upside down. You've got bond investors out there buying bonds for capital gain, and stock investors investing for yield. That's upside down in my book. So when you look at a negative 10-year return on 10-year Treasury, a 10-year German bond, sovereign debt in Germany, that's a negative rate, at 1.5% plus on the 10-year here in the United States, looks pretty attractive. So already capital's coming here to buy our bonds.
Yeah, certainly an issue if the Fed moves in the opposite direction to other central banks. David, very quickly, if you don't foresee a rate hike in September, do you see one in December?
Yes, I think they want to get in. I think they want to get on the page that they get one more in December. Like they said, one of the key words you'll see out of her statement, this coming week, she'll say that they're data dependent. So if the data supports it, they'll get one, but it'll be a while before we get the next one.
All right, thanks so much. As always, David Nelson, Chief Strategist at Belpointe.